This episode is presented by Invest Puerto Rico. If you believe your business can go anywhere, Puerto Rico is the place. Hello and welcome back to Equity, the TechCrunch podcast, where we unpack the numbers and the nuance behind the headlines. This is Alex, and today is April 10th, 2024. Welcome to our Wednesday show, where we dig into the critical startup and venture capital stories from the week thus far. And today's show is packed because there was so much good stuff to choose from. So here's what I picked. Guesty's big new round that shows just how hard it is to get a unicorn price tag these days. Another startup buying a startup story. You know I love those. Why Monad Labs is such a gutsy venture deal. Cerra and cybersecurity. And finally, a new $60 million venture fund that has a very interesting geographical twist. Let's go. First up today is Guesty, a platform that helps accommodation managers handle their business on platforms like Airbnb and Vrbo. It just raised $130 million. And sources tell TechCrunch that the company's valuation at its Series F was around $900 million post-money. Now, the startup is based out of New York, but does have roots in Israel, and says that its revenue grew 5x in the last 3 years, and it expects to turn profitable this year. I'm reading the profitability point as, cash flow positivity, but regardless, those are pretty impressive numbers. Now, the company wouldn't give us actual revenue figures, but I do think when we compare its price to its performance, we do get an indication about how things have changed in the world of venture valuations. KKR led this round, and the space that Guesty competes in is heating up. So Guesty last raised a Series E of $170 million that valued it at $690 million back in August of 2022. And Guesty's close competitor, Hostaway, raised $175 million last May. And then within a day of that news, Get Your Guide raised $194 million. So lots of capital going into the space, I think because people are once again traveling, and therefore managing Airbnbs is a bigger business. So there's more people to sell to. Now, how did Guesty manage to raise so much money in today's market in such a competitive space? I dug in just a little bit, and it turns out the company offers a blizzard of services for short-term rental providers, things like payments and websites, and actually even capital. So the company has gone broad inside of its niche to help get big and keep growing. It's a lot of work to not be a unicorn. But then again, the venture market is probably back to normal pricing now, which only feels weird because of how long that last bubble lasted. Next up, more startup buying startup stories. I'm a complete sucker for these, so I will always put them on the show when I get a chance. Today, Multiverse, which is a UK-based unicorn that TechCrunch says builds apprenticeship programs for people to learn tech skills while on the job, has made an acquisition to actually upskill itself. Now, in this case, the company is buying Searchlight, which is a startup that builds AI-based recruitment and assessment products. So why the tie-up? Well, TechCrunch reports that the plan will be to use Searchlight's tech to create new AI products that Multiverse, its new parent company, can use to expand its training services for professionals. Very cool. Now, to give some scale here, Multiverse has raised over $400 million according to Crunchbase. Searchlight, in contrast, has raised less than $20 million. So we're talking about a roughly 20x differential in capital raised, so it makes sense that Multiverse is doing the acquiring and Searchlight is doing the selling. This deal reminds me of the Wonder School early day transaction that we saw recently and actually had the CEOs from on the show a few weeks back. I'll throw a link to that in the show notes. In short, we are seeing larger and better funded startups buy smaller, less well-funded rivals or tuck-in services, really, that can bolster their overall product mix and therefore velocity. Recall that Guesty does a lot of different stuff? Well, one way to avoid having to build all that new stuff from scratch is to simply absorb a smaller company that might have struggled to raise a round at an attractive price and already built what you might want to have built yourself, right? I love these. As they come out, we'll talk about each and every single one of them that I see. Next up is a very interesting venture capital funding event that made me sit up and wonder what I was reading And that's what I love to see in a venture capital deal, because it should be a little bit out there, right? That's the case with Monad Labs. So Fortune got the scoop here. I'm going to go ahead and quote them. Monad Labs, quote, finalized a $225 million round led by Paradigm with additional funding by investors, including Electric Capital and Green Oaks, to build a layer 1 blockchain to challenge competitors such as Solana. Okay, this is awesome. So what does all that mean? Well, it means that Paradigm and the Monad crew think that there is room in the market for another base layer blockchain, or L1 if you want to use the term. So think Bitcoin and Ethereum and Solana, not L2s or layer 2 chains like Base. If you need a super crude and stupid analogy, well, boy, do I have one for you. L1s are like operating systems to L2s, which are more like apps. That's clearly too far of a stretch, but you get the idea. And that's why the Monad Labs funding round is so interesting. Another L1 is a big deal if it actually has a shot at working. And the Monad crew just put nearly $250 million of investor capital into their pockets to try to give it a try. I don't think it's really that great that we live in a 2-horse mobile OS world, and nearly as limited a PC OS world, just to be honest. So more L1s, returning to my tortured analogy, are fine by me. And there is other stuff going on in the world of Web3. TechCrunch also recently reported that Kiki World just raised $7 million for its hybrid beauty startup / Web3 service. So how does that work? Well, TechCrunch writes that the company intends to allow its community members to vote on the features they want before the beauty products are made. And then if you do vote, you get points and digital tokens. Now, the thing that kind of threw me here is the blockchain aspect of Kiki is kind of obscured. Users will be able to vote via email, which then makes me kind of wonder why you need the blockchain. But maybe this kind of like IRL / Web3 thing is going to work. I don't know, but Kiki just got $7 million for its plan. So let's see. And I guess let's see if they eventually build it on whatever L1 Monad comes up with. What's next in tech? That's not the right question. It's where. Puerto Rico, more than just a tropical paradise, it's an innovations paradise, where startups and global players coexist in a vast and vibrant ecosystem, where talent runs deep, highly skilled, and bilingual. Plus, the island offers the most competitive tax incentives in the US. If you believe your business can go anywhere, Puerto Rico is the place. Find out more at investpr.org/TechCrunch. I'm going to squeeze one more startup story in today. Of course, we will have deals of the week on the Friday News Roundup, but very briefly, Cerra just raised $300 million at a $1.4 billion price tag, and that's CYERA. This is a lot of capital at a unicorn price, so it caught my eye because we don't see this too often. And then the deal is doubly interesting because the company raised $100 million last year. We don't see that many companies doing back-to-back yearly raises, let alone in the 9-figure range, let alone tripling from $100 to $300 million. So clearly, whatever Cerra is working on, investors are excited by it. And what is it doing? Well, data-focused cybersecurity. Of course, data is once again the hottest thing out there because AI wants to eat all of it. And cybersecurity is very important because, well, everyone's getting hacked. I have been a little confused by the lack of big cybersecurity rounds in the market lately, and that's because their public market comps, companies like CrowdStrike and Zscaler, are some of the fastest growing companies out there in the market. But this Cerra round does in fact help me understand what's been going on because the company just raised enough money for 5 or 6 big cybersecurity rounds all at once. So I guess investors were just waiting for Cerra to go back into the market. Before we go, a little bit of venture capital news to throw into the mix this morning. TechCrunch reports that Vered Keppel Africa Ventures, or VKAV, plans to back up to 21 growth stage companies across the continent after closing its first fund of $60 million. Now, the fund saw its first and second close back in 2022, and is now just done fundraising, which I think just goes to show how difficult and how much the funding market has changed for VCs. But given that Africa as a continent has seen its total venture capital activity slow in recent years, it's good to see more Africa HQ'd funds investing in the area because it's good news for local founders. Now, Vered Keppel Africa Ventures, VKAV, is based in Nigeria, but TechCrunch writes is part of a growing number of African VCs that are receiving backing from Japanese institutional investors looking to diversify their risks. This is very interesting. If you go back in time, there's been a lot of coverage of different countries investing in Africa. There was China doing a lot of infra in Africa for a while, for example. And now we're talking about Japan investing in African VCs. Again, just super cool. And I'll just say that I think we'll probably see more of this over time, especially in societies that have shrinking and aging populations kind of looking outside their borders to invest. Anyways, VKAV, 60 million Africa. Love it. That's our show for this lovely Wednesday morning. Our Friday roundup with Marianne Azevedo going into deals of the week and the biggest themes from this week in startup and venture capital news will drop Friday morning. We'll, of course, see you then. But if you need even more from Team Equity, well, we are Equity Pod over on X and Threads, and we are TechCrunch Pods over on TikTok. My name is Alex. This is Equity Wednesday. I'll talk to you soon. Bye. Equity is hosted by myself, Alex Wilhelm, and TechCrunch senior reporter, Mary Ann Azevedo. We are produced by Teresa Loconsolo with editing by Kel. Bryce Durbin is our illustrator, and a big thank you to the audience development team and Henry Picavet, who manages TechCrunch audio products. Thank you so much for listening, and we'll talk to you next time.